Hey everybody, Mike Mills with Verity Mortgage again today. Coming to you with Amy Cearnal. She is a broker here in DFW with a company called Front Real Estate, which is actually her company that she started with her husband, how many years?
2014.
2014, yep. So a little while ago. But I want to talk to Amy today because this is for all of my agents out there that are kind of wondering, where's this whole market going? Like, what is happening? We're all dealing with inventory shortages. We're dealing with multiple offers. We're dealing with, a lot of competition really between agents trying to get listings and all that kind of stuff. So I thought Amy's been in the business a very long time. She actually has a unique background in that she served in kind of all facets of real estate. To eventually lead her to being a broker here in Arlington. But so I want to kind of get some of her thoughts on where we are in the market, where we're kind of going, compared to things that you've seen in the past, and what you see coming down the pipe. But just like everything else, I always kind of like to start with a little bit about you. Because obviously, you've been in Arlington a long time. A lot of people around the area kind of are familiar with you. But for those that aren't, kind of help us understand why you are definitely the expert on this topic.
Well, Arlington is home. So I was born at Arlington Memorial and really haven't left. So I've been here for a long time. But more than that, I really hope to continue to invest in the community and try to make it a better place. And so that's really what Spencer and I's goal is really to, when we decided kind of as a grown-up to move back and say, hey, okay, yeah, we're going to really settle here forever, that we wanted to make sure that the community continued to grow and do good things, and that we had a part of service to that community. So that's been really cool to be able to serve on this real estate side, take the knowledge that we had and be able to share it with our clients and customers, and really hopefully really make everything better as we continue to go. So I have had this kind of unique background where I had done title and mortgage before coming over to this side. I like this side better, sorry.
Trust me, I've thought about it myself a few times.
Yeah, it's one of those things where you kind of have to figure out your jam. Took me a couple of spots, but I did learn a whole lot along the way, and so that does give me this kind of unique perspective to be able to bring to the situation. I am also a huge dork and love a lot of education, and so I am constantly seeking out and trying to make sure that I don't have any gaps in the you don't know what you don't know type situation.
Yep.
And so to that end, so I went to 10 economic forums this year, really trying to figure out, where is this market going? What can we give good advice and opinion for our clients about, and how can we, really confidently say, hey, this is what we anticipate to come next. Because it's hard, I mean, people are coming to both of us all the time, and it's like, well, that's a good question. What are values going to do? Is this now the right time? How do I jump in this, potentially a lot of uncertainty that is happening in the market right now? Now,
we lost your background.
Yeah,
it's okay. We'll open it up a little bit.
All that to say is, my market, it is a little bit hard to say what the situation is, given the current unrest in the Ukraine, right? So
there's a lot of stuff going on in the world.
All of that is new information. So I'll tell you that, it is, we are all waiting, with a little bit of bated breath to see what will happen related to that. However, the markets have been very clear on what they anticipate will happen this year. So specifically regarding interest rates, which I know y'all have talked about already, but that, hey, we are in a rising interest rate environment. There's no secret on that. Some of that has already been built into pricing, but it definitely should be built into consumer expectations as we continue to go in 2022. So that is kind of known, like we're good. We have the heads up on that. What we have the question mark then on is, how does that reflect in pricing? And traditionally we would have seen this interest rate environment rising, and that would cool off consumer interest, and so then they would back off a little bit and it would more stabilize pricing. However, what we are seeing now is, and what all these economists are seeing that we're talking to, is that because there is so much demand for housing in the Metroplex, for a couple reasons. First reason, not really, the primary reason not being all the outsiders coming in, but being the lack of supply due to a failure to keep up with building trends. So we're looking at this situation of, hey, we have underbuilt since 2008.
Yep.
We thought, oh my gosh, we were getting too fat and happy in '08, and so let's pull it back. And we just have not gotten to the levels where we really needed to be to keep up from a capacity perspective.
And it takes years to grow that. It's not something you can just fix overnight.
No, and it really is something that still, from a legislative perspective, needs to be fixed as we continue to see different things happening with bank loans and that kind of thing, like way up higher on the developer level than what we're seeing down on the consumer level.
What are your thoughts on that specifically about, so, there are obviously homes being built. You can go out and, find new neighborhoods built all the time. The problem is that most of those homes are $400,000, $500,000, $600,000. The affordable housing, when I first bought my house in 2004, my very first home, I paid $130,000 for it. It was a 1,800 square foot home, and right off of Shorewood in Arlington, right there by the lake, nice neighborhood, the whole deal. And now that house, I think, is selling for like $260,000 or $280,000.
Probably $3.
So almost $3.
All
yes.
day, yeah.
Right. So why do you think there's such a big gap between builders being able to build homes that are affordable and the first-time home buyer really not being able to find anything that's in their range?
Yeah, it's such a great question, and I'm going to correct you a little bit on the affordable housing thing.
Okay.
Now we're the buzzword is attainable.
Attainable.
Right.
Okay.
So
good.
it's saying, hey, we're not even trying to create affordability. We're trying to make it attainable for people, and so it does. And I think that does just kind of bring like a little bit of the like cancel culture to that of like we're trying to be
change words,
sensitive to that, but we are trying to be sensitive to that and make sure that we have appropriate housing for folks at all sorts of income levels within our community. And it definitely has been a more kind of egregious impact on that lower end side. So it is this like, okay, how do we help that? How do we get there? Part of it is trying to create that more supply. So part of that actually then backs up into what are our zoning laws and what are our ordinances within the cities to modify, to change. So like currently within the city of Arlington, if you had a lot that you wanted to build on, the UDC, the Unified Development Code, would say that you need to put a 1,500 square foot or more single family house on that property. Well, when you look at attainable housing, 1,500 square feet at $200 a foot, which is kind of average around right now, that's going to put it at a $300,000 plus home. So in order to get something more attainable under $300,000, we've got to potentially change up some of those zoning laws to get different product on the ground. Also potentially got to change some of the consumer mentality of, hey, I don't need to have 2,500 in order to accommodate my family. There are ways to accommodate a family underneath that. And so that, that tends to change too. I mean, when y'all bought your first house at 1,800 square feet, I mean, when my parents bought their first house at 1,200 square feet and had 3 kids in there, bigger, part of that is we kind of have this modification over time where I think we swelled to a little bit, and now we'll kind of see some constriction back to a potentially more modest first-time homebuyer product out there, but still something so that it's not being forced into the rental market and letting homeownership leave.
Well, and I think too, when you look at the expectations of the people purchasing the homes, I do think there is a bit of a generational shift that's occurred in that the millennials and the Gen Zs really aren't necessarily looking for the McMansion, right? They're not trying to find the house that is 2,500 square feet. I think the economic crisis that we went through in 2007 and 2008, and then the ups and downs that we've experienced, have really kind of put a stain to some extent on what their expectations of whether it is, we're buying a bunch of stuff, you have to have the nicest car, you have to have the biggest house. I think some of that's starting to wane a little bit, but I didn't even think about the idea that a lot of the issue about attainable housing has more to do with what the code for each city where it's being built is. I mean, because I'm in Mansfield, and I know that Mansfield has, I've been to a couple city council meetings where they've talked about the minimum square footage that they have to build because they don't, for whatever reason, they don't want the smaller homes coming in to keep driving values up, I would imagine, right?
Yeah, and it's one of those things that just over time, a lot of the jurisdictions have gotten that way, and there's nothing necessarily wrong with that, but it does really impact that affordability option.
Well, and I was concerned because I saw recently, and I think it was on a national level, but I know in Texas it was big too, is that the amount of homes being purchased by individuals versus entities, the ratio has changed quite a bit because in 2021, it was something like, you may know better than me, 20 to 30% of homes purchased in the United States were purchased by entities and not people. Now, granted, there's a lot of flips in there. People are buying and, fixing up houses and selling them. So I think there's, 10 to 15% of that market went back for sale.
Yeah.
But, my concern and what I see a lot is, everybody leases their cars now. We all get on Spotify and lease our music.
Yeah.
We lease everything, and we're getting to a point that if you can't afford a $300,000 or $400,000 house, you're kind of becoming a renter, and that's that concerns me a little bit, just as a person that just wants people to have home ownership.
So it concerns me too, and I have this pretty knockdown, drag out argument with some of these folks that are building specific product now for just rent.
Yes.
So single family for rent product. And so that's impacting where then that's less single family that's on the ground for purchase. It is really just for rent. And their argument is, hey, there are a lot of consumers out there that just prefer this. They don't want to have to deal with that broken pipe, and they don't want to have to deal with, the cost of transition of selling a home and then buying another one in a different market if they get relocated. They just want to be able to just end that lease and move on to the next product.
There's a little bit of truth to that, probably.
There probably is.
Yeah.
However, when you look at generational wealth and the transfer of that and what people who have been marginalized over time, it's those tenants.
Correct.
And so that is what is our big concern from the real estate community side, is not to say that that doesn't have a place. Potentially it does have a place in this market. But we also want to make sure that there is an attainable option for those people to at least consider regarding home ownership, and that they don't feel like that is their only option. Because really, when you look at that, so let's say these entities that are building this build for rent situation, they're building it, the market is likely going to continue to increase, their values are going to continue. So let's say they're building at 300 right now, and that likely will be at 400 in the next 5 years, let's say. And during that time period, that tenant is going to see that rent go up and up and up, versus a homeowner that goes in and purchases that home at $300,000 now. The value is going to go up, so they're going to have this equity, this cool equity growth that's happening for that. Their payment is going to be impacted by the rising taxes and insurance potentially. But their payment is going to be locked in on that 30-year payment. Right. And so that does not have that kind of cyclical affordability issue where they're dealing with that every year of, oh my gosh, rent went up again, and I've got to continue to fight that battle.
Well, inflation obviously is a big topic for everybody that, everybody's concerned about, rising prices of everything. Well, that includes homes and rent and everything else. But some people I don't feel like fully understand that inflation, when it comes to real estate, if you own it, granted, now if you own it, it's actually a good thing. It can work in your favor. Right? Because your value goes up. The money that you borrowed 3 years ago, this year, the year before, whatever, that money that you borrowed is fixed, and it's not affected by inflation.
Right.
So unlike your rent, which is going to continue to go up with inflation. So it becomes a real challenge for people these days to really see that, okay, if you're really concerned about that and you have some money to put somewhere and you're worried about that money being devalued, because every day it sits in your savings account, unfortunately, it loses value. It's a depreciating asset. But if you put it into real estate, into an appreciating asset that's a benefit of inflation, that has a benefit of rising prices, then over time that debt is more manageable, and now you have an actual asset that you can use to leverage to create wealth. Right?
Yeah, absolutely. And that's what we're seeing homeowners do all the time right now. I mean, they have been a part of this pretty rapidly increasing environment that we did not anticipate, but they are getting the benefit of that. Right. And so it's not necessarily cash that they can utilize right this moment, because it is locked up in their property, and they could do a home equity or something like that to leverage that. But most of them are sitting with that equity in their house, just like it would have been if they were sitting in a market account and their stock market had gone up. They would just be sitting with that value there as well. But long term, that is going to be a huge game changer for them in their ability to move up in the market.
Right.
So somebody who is coming into the market and saying, okay, right out of college, let's say maybe I go and rent for 3 or 4 years and then I buy something. Well, then you buy something, then that first time buy, it is still harder to attain than the next time buy, and the next time, versus that next time buy, well, you had that equity growth in that first house, and so you can roll that over and not have as much impact on that debt payment going forward too. So it really gives some more options for those people that will jump into the market sooner and stay in the market.
That you're talking about, like when they buy it right out of school, it continues to roll to the next one, roll to the next one, roll to the next one, so you can grow. Well, and I think if you look at most individuals that have any level of wealth, let's call it, the vast majority of them have holdings in real estate. I mean,
Yes.
they just do, whether it be commercial properties, investment properties, their own personal house, second homes, whatever. It is a really good place to be able to put your money and know that it's going to be taken care of over time, because was it Mark Twain, it was like, buy real estate, they're not making any more of it,
That's
right?
right.
So it's a finite
all
resource.
runs the land.
That's right.
So
So what do you think, as we start looking forward to, I joke nowadays when someone asks me, like, when's the best time to buy? I'm like, yesterday.
Yeah,
Yesterday was the best time to buy for 100 reasons. So I have my opinions on this, but when someone calls you and says, okay, Amy, I see rates going up, I see prices going up, when's it going to settle down?
Yeah.
That's a question we get. When is it actually going to level out and plateau?
Yeah, I'm going to wait until that, and then I'm going to jump in.
Right.
So we are seeing that there is likely not to be a reversal of the price point or anything like that. None of the economists are saying, hey, we're at, let's say a $300,000 average now, and we're going to drop to a 275. No indication of that. We'll continue to go from 3 to 3.25 to 350 to 375. We'll continue to rise at a pretty good clip potentially for the next 4 to 5 years minimum.
Right. Because that's most of the time horizon. People don't go much further out than that.
Could be longer than that, right? But chances are that we will continue to be in this environment. So every time that somebody asks me, like, when should I buy? It is yesterday. This is the lowest price that I will ever be able to sell that home in my career.
Yeah.
So either we jump in now, or we wait and let somebody else ride that market up and continue to build the equity that way.
Well, and you said this a minute ago. It's really basic economics. It's supply and demand, right? It's how much supply do we have and how much demand? Because the only way that you're going to see an ease in the market is if one of those things changes.
Yeah.
Okay. Well, we understand, based on what you were saying earlier, supply is not going to catch up anytime soon, because we just don't have enough builders. We have people, or I should say entities, buying homes that don't make their way back to the market, so they're being held as investments. So our market's shrinking even more. And then you look at demand and say, okay, well, maybe higher rates and things like that will cause demand to go down. And I would argue that there are probably parts of the country that will impact it.
I would say that's right.
Midwest, some places like that where there isn't a strong influx of people. But here in Texas, and especially in DFW, that's not happening, and it's not happening anytime soon. If you've ever seen those little infographics, that you'll find on the internet, where it shows like California and different countries on the coast, and it shows their migration patterns and where you're seeing the vast majority of people move to, it's right here.
Yeah, and that is having some impact for sure. So where we're seeing nationally values rising, the Metroplex is a little bit unique because we also have these migratory people coming in as well, which we're here for as long as,
absolutely,
we want to wave and say howdy and come on down, guys.
Yeah.
But we also are, because we're seeing that coupled with the lack of building, and we've just got a lot of people that want to get into home ownership, that's what's causing some of that.
Yeah.
I would say the only thing on the horizon that would impact where we wouldn't need as much building capacity would be really the transition of the boomers really out of their housing, and we don't, and hopefully that's not real soon. I don't know, because that's my parents. It's like hopefully that's not like a super quick issue or anything like that. But we've got another 10 years at least before that really starts to happen, and even then we also have this kind of expiration date on some of the housing that is out there. When you look across, like Arlington is a great example. East Arlington specifically is a great example. So East Arlington was built out with tract homes back in the 60s, early 70s. Those homes were built as 30-year build product. So the wood that they used for framing, the foundations, all of it was built with a mind of, we need to make sure that this house stays good for 30 years.
Lasts a long time.
Yeah.
Right.
But that was 30 years expiration was at least 20 years ago, if not 30 years ago. And so now, like, a lot of those homes are on borrowed time, and so they need to go through a rebuild process, kind of like what we're talking about. Well, that needs a builder to come in and do that, needs that financing, that needs that rebirth of some of that as well. And so we'll continue to see, that process go as the market continues to shift as well.
Well, and on the loan side of things, there is a lot of renovation stuff that's becoming more and more, a bigger player. They're becoming easier to do. I will say in the past, they're challenging to say the least, just because of the process. But it's becoming more and more prevalent just because, these days when you're out looking at a house and you're seeing what your options are in certain price ranges, it's very rarely is it going to check all the boxes for you. It's just, it's limited. So you have to have a little bit of a vision. You got to be able to see through the old paint and the old flooring and walls and, kind of get an idea of what you can do to make it your space. But, and these products definitely help. But that doesn't make it any easier when you're having to look at 50 homes and they all have 25 contracts.
Yeah.
So another question for you is, obviously you have a large brokerage here. You have agents here in Dallas-Fort Worth. You have some in Austin, Houston, I believe as well. So you guys are kind of all over the state. When you're talking to your agents that are dealing with buyers that come into this market, right? Because sellers are easy, right?
Right.
If you can get the listing, that's the hard part, right?
Yeah.
Get the listing. If you can get it, then we're going to sell it for as much as we can, right? I would say
really
easy.
even get the listing, get the seller on board with transacting in this market because they've got to go somewhere too.
Right.
So
they've got to find a place to land.
Yes.
So when it comes to buyers specifically, what are you telling your agents? Because I see it on my end when I pre-approve people and they're out there looking at homes, and I'm even giving them the whole spiel up front now of, hey, look, you're FHA borrower, you're trying to buy a $250,000 house. It's going to be tough sledding, and here's why. And we go through all that. But for agents that are saying, okay, well, I've got these people, their expectations, we're going to look at this first house, and they don't want to offer the list price.
Right.
They're wanting to offer $5,000 under because they don't feel like it's worth it, et cetera.
Yeah.
So what are you telling these guys to help them, kind of get their borrowers on the right track?
Yeah, so we are starting with a really pretty intense buyer presentation at the beginning of the process so that they kind of understand more of what we're going through, because I don't want for anybody even to go and look at a house and feel like they have a real shot at getting it if they are making an offer under list, right? If they're making an offer asking for closing costs, if they're making an offer, really potentially that's even at full price.
Yeah.
So that's where in that buyer consult, we're really going over, hey, here's where the market is. Let me show you some of these neighborhoods trading at an average, y'all, of 103% of list price to 100 and that we're seeing them capped out at more like 115% of list price, and helping them to understand there is a true need for cash above the appraised amount, because the appraisal is generally close to that list price. And when all these offers are coming in over, the seller is expecting the buyer to guarantee that amount over appraisal, and they're expecting them to bring that portion in cash. So that puts that buyer in a position where they need to have their down payment, so 3 to 5% down payment, their closing costs another $6,000-ish, and then plus that differential in cash. So if that's another 3% over their purchase price and they're buying at $250, that's another $7,500. And so it does really impact that attainability from a cash upfront perspective, because they've got to have that in addition to being able to qualify and all those good things that y'all are doing. But we really need them to be in a strong cash position to do that right now. And so we are having a lot of really, kind of tearful conversations about like, hey, you've got to come up with that cash. And so really before we go and start looking at houses, because I don't want you to just lose, maybe it's time to pick up DoorDash for a while and like really hoard some cash. Maybe it's time to talk to Aunt Edna and say, hey, I know I'm due $20,000, someday.
Right.
Maybe today is the day. Something, and that, y'all, that is tough. That sucks. I hate to have to put people in that position, but that really is the reality, is that without that cash, it is going to be really tough to transact in that market. And so that's on the more on the first time home buyer side, where they're coming in, with this expectation of, I want to be a homeowner, but I really don't have a lot of cash. I thought maybe I had a down payment assistance or something. There's really not any of that right now. If you're not in a strong cash position, then I've got to figure out how to get you into that stronger cash position. So we're doing that to start. Then on our move-up buyers or downsize buyers, where they are trading a house in order to get into another one, that's where we really do have some options for creativity, and we are looking at more of how to leverage the equity in their home to make really solid offers on the next home without the fear of, I just sold my house out from underneath me. And so we are doing a lot of creative things. Mike and his team have been great at helping us figure that out for the individuals asset portfolio that they have. So, it could be that we're drawing from 401k for that. It could be that we're doing something more of a bridge or a home equity, or that we are doing a lower down with a recast on the back end. There are a lot of different options that we have out there that really, with a great lender partner, we can talk them through and get them comfortable with, okay, this is going to work. Like, I am not going to put myself, my mom that lives with us, our 3 kids and 8 dogs, all out on the street, because that's what so many people are coming to us with. And so we are really talking through that, but it is definitely a different conversation than what we had even a year ago, y'all. It has just changed.
It's dramatically
on there.
changed. Yeah.
No contingencies. I cannot sell your house with I can't help you buy a house if you still have a contingency on the sale of yours. So we've got to figure that side out to make sure that they are really prepared going into this market.
Well, and
not fearful.
Yeah, well,
right?
I think a lot of people, when it comes specifically to things like down payment, especially with your move up and your downsize people, when you look just at your 401k, right? If you've been paying attention to the stock market last couple days, it's not doing the best.
Right.
And that is certainly something that gets influenced by world affairs and all the stuff that's happening right now. So maybe taking some money out of that and putting it into your house isn't the worst idea in the world, because it's protected and sheltered better there. But also too, a lot of times, whether you're talking to your lender or your agent, you want to understand what the impact of your 20% down is versus 5% and what that really means. Because, I cross a lot of this in my world when people get so upset about mortgage insurance, like it's this horrible thing that they never want to mess with. And I'm looking at them and going, okay, so you want to put down $80,000 to save $60 a month, when in 2 to 3 years you can completely get rid of it, because all you have to do is get an updated appraisal, go to your servicing bank and they'll fix it. Or when we're talking, you mentioned the recast thing, whenever you have your home, as long as you can qualify for 2 mortgages, you can always take that equity once you close and you can put it into your house if you absolutely want to. I don't recommend it all the time, but you can, right? And you can set your new payment. It's called a recast. You can do it one time throughout the life of the loan, but there's a lot of options. So before you get your mindset as this is what it has to be, you got to kind of get creative and explore a few things. And I think especially for your agents, you spoke a lot about, we have to prepare them for this, and this has to do with expectations, right? Mm-hmm. You've got to let your people know going into this stuff what the expectations are, because especially as an agent, if you don't present this picture clearly and help them understand, then a lot of times they think it's you. Right.
And it's like, I knew all along that was not going to happen. So I need to help. And so we have been having conversations with some of our agents too on really like, hey guys, it's not that we don't want to serve that margin of population that does not have the cash right now, but we also want to show them the grace of not putting them through this process with the expectation that they are going to be a homeowner at the end of it, if that really is not possible for them right now. And so we are going through and taking kind of our pipeline of folks and saying, okay, man, like, let's create a plan for you to be a homeowner maybe in fourth quarter or maybe in 2023. How can we figure that out? Because and that way, then from an agent perspective, then we have time to serve the highest and best need, because there are people out there right now that need us, but that if we're busy showing people that really aren't eligible to buy or would be in a multiple offers situation, in the bottom 20 of 40 offers, then it's not fair to set them up for that.
Right.
So we are doing a lot of those conversations.
What about on the listing side? So obviously we say, I said earlier, well, listings are easy. Nah, they're not easy. Certainly if you're the listing agent, you're sifting through 50 offers, that's not easy. But it certainly is, it's easier to sell for sure.
Yes.
The process is more challenging sometimes. But so what are you seeing on the listing side of things that, some barriers you're running into, or whether it be from the agent's perspective or the seller's perspective? What's some stuff you're dealing with there?
Yeah, pricing is really our biggest thing right now with listings. And really we deal with it somewhat on the buy side too, because we're seeing listings come in kind of all over the board. So in theory, that list price should be close to what it would appraise for, but some of that is left up to opinion. It's not just a super black and white. There is some gray in between. And so we're having to get really good at analyzing those comparables and saying, okay, here's where we think it is right now today. And so we may have a listing appointment with somebody, like in February, that then they get their house ready to list and they're going to list at the end of March. Well, we might have gone through 2 or 3 prices by the time we actually get to listing in March, because we are continually pulling that to really make sure that we are dead on that pricing. It's also difficult because we see the pricing going up, and we see sellers wanting to stretch a little bit on that. And so they're saying, well, I know you're saying 415, but let's go ahead and go for 435 because, my neighbors, everybody's telling me that things are going over. And that likely is true,
Sure.
but we also have to really help them understand the validity of listing at more of that appraisal price, so that way then we can get really the end consumer, the buyer, to guarantee that portion that's over that appraisal.
Right.
Versus if we list it at a place that it really won't appraise, then we've got to deal with kind of backing into that number and how to create some fairness and equity among the parties for that. So,
well, and it probably creates a bit of a challenge too, because if you're too far over the list price on what the house will actually appraise for, it's not that you can't get the offer,
right,
but finding a person that has an extra 30 or 40 grand or whatever the number is,
right,
that's where you have it. And then you go through 2 or 3 contracts before you actually get your house sold.
And they get the buyer consumer gets scared too, because they do have an expectation. I'm going to have to pay over a list, but if it's overpriced in the beginning and then to pay over list, that's where we see them really stagnate on the market, and then it just kind of creates issues from there. So we really are trying to nail that pricing dead on from the very beginning.
So, I do know that you spend a lot of time in the classroom, which is one of the things that, I admire about you, because I think a lot of people these days in all kinds of industries, not just ours, we get to a certain point in our career and we kind of have it all figured out, right?
Yeah,
we have all the answers.
Maybe I will someday.
Right. No, we'll never get there. That's the point. But you spend a lot of time learning and growing that brain matter to kind of help you understand what the market looks like, where things are headed, where we've been. History is important too, because you got to know these kind of things have occurred before. So you've been to a lot of economic forums lately, and I'm curious as to, now we obviously know 4 to 5 years there's going to be, we're not getting any better as far as direct market, but what about like our industry as a whole, real estate in general, lending, real estate, title, when you look at all kinds of technologies that are moving in, the iBuyers, you have people that can go online. I think today, somewhere you could schedule your appointment, on the internet, you could show up, you could make an offer, you could do all kinds of stuff, pretty self-sufficiently, right?
Yeah.
So anybody that has concerns about where, let's say 10 years, 15 years, what does our industry look like and where are we headed? And then knowing that, how do we position ourselves to still be relevant in whatever's coming down the pipe?
So I think that's a great question, and it is something that keeps me up at night, just a titch.
Yes.
Knowing
me too.
that,
I think about it a lot. Yes.
I put all my eggs in this basket. Spencer's working with me too. Like, hey, if this whole real estate thing goes away,
right,
what's next?
Right.
I will tell you though, I talked to a lot of smart people about that, and what really I have found their general consensus that I'll share, not as my original thought,
sure,
but is that there will be a place in the market really for all of those kinds. So there potentially will be a continuation of the iBuyer trend, where you will see investor buyers coming in, purchasing homes, putting them on some sort of easy show system, writing their offer online, and a consumer potentially buying it. What I'm really watching on that is this whole blockchain, NFT, crypto. I think there is going to be this huge move for that, potentially more so than iBuyer even as we go.
Well, you're creating a deed nowadays. You can create a fractional ownership in real estate. So it's actually a good thing.
It is actually. I think it really can be kind of the next generation of some of that.
Well, especially for affordable housing, that's the thing or attainable housing.
Yeah.
That's the thing that with the blockchain and crypto, and I think crypto's a bad word to put with that. I would say blockchain is. But when you have fractional ownership in properties that you can subdivide out, and you can actually own a house yourself, but with multiple other people, so it is affordable. So you don't have to have all of them. It's like crowdsourcing, housing kind of. But
and it's a different, you're buying the LLC instead of buying the asset.
Right.
It's a whole different thing. And so if all of that just sounds Greek, there's a lot of classes out there. There's a lot of information coming out about it, and we'll continue to see more and more come out as it becomes more popular and that kind of thing. So all that to say is, I do think there will be a space for that. I think there'll be a space for iBuyer. I think there'll be a space for continued less full service brokerages, right? So where it is more of just a listing on some sort of database, maybe MLS, maybe a different database, some sort of reduced fee situation. I liken it kind of to like a TurboTax type situation, right?
Yep.
So my dad loves TurboTax. He's done it forever,
Yep.
and he, that's his jam. And so he goes on and does it. His taxes are fairly, simple.
Yep.
And so he's really comfortable with it. Never had a problem with it. All good. My taxes are really more complex.
Right.
And I grew up with Dad, and I was like, yep, I'm supposed to do TurboTax. And I start doing it, and I got underwater very quickly in this this crazy career.
Yes.
And so I said, okay, I have got to hire somebody with actually some knowledge that can help me walk through that
experience,
process.
right?
Yes, and I am happy to pay the fee to make that happen because I need it to make sure that I'm safe, that my assets are safe, that everything is good.
Yeah.
And so I think there will be still definitely a space for realtors as we continue to serve not just that population. Of course, we'll serve all population, but I don't think it will ever go away because we will have a lot of people that look at this as, oh my gosh, this is my biggest asset.
Yep.
It is not even something that I do every year like a TurboTax thing. It is something that I am doing, maybe 4 times in my life, and I really need to pay a professional to walk beside me.
Yep.
And they should have some different product offerings, but they will be able to choose somebody to come in and help them with that. So.
Well, and I think, my message that I'm sharing with, agents and lenders and stuff that we talk to all the time to people on my team is we really have to, in order to put yourself in a position to where you still have value when these things start to change, you've got to even reposition yourself a little bit in who you are and what you're representing to buyers and sellers, right? Because, the days of just answer your phone, take someone to show them a house, write up a contract, and you're good, I think those days are fading.
Yeah.
And where we really need to get to is, which is why we've had such great success for a long time, is because we're the harbingers of information, right? We have all the information. Yeah. We know, we've been through years of experience of dealing with all this stuff. And what you have to be able to present to people is your brain, your knowledge. Hey, this is what I know. This is what I understand. And the great thing these days is social media is such a big tool because, in the 60s, if you wanted to let everybody know about yourself, you had to take out an article in the newspaper. You had to, pay CBS $20 million to put an ad on TV. These days, it's free. You do it all day long, all by yourself. And, we all do little silly things sometimes to put ourselves in a place to where people want to hear what you have to say, right? You have to put yourself in a place where you become an expert on a particular topic. And you can't be an expert at everything, right? You can only be an expert, like you're not an expert on taxes. You pay someone to do that for you, right? So, but whatever it is that you're doing, real estate, mortgages, title, home inspections, roofing, whatever, if you have knowledge and you have information, share it with people because that puts trust in you. That puts the fact that you are the expert, that you know what's happening, and people come to you for questions. And that's how I think we position ourselves going forward is you have to be the expert on your topic and you have to provide information. Because if you're just a regular lender that's just out there doing loans, or you're just a regular agent that's out there writing contracts, and you're not creating a space for yourself that puts you in a light to where, hey, look, if you want to know how to do this, call me, talk to me, put me in that spot. And I think that's where the market's going as far as us being able to keep our value as things progress.
And we're working on that all the time. What is our value proposition?
Right.
We look at it as a brokerage, but we also look at it as an individual agent. What am I providing of value to that consumer for them to pay me that fee? Because I think that's what realtors have gotten real comfortable for a long time on just this is our fee and blah, blah, blah. And we go on and we don't ever talk about it, and we don't really help the consumer understand all the pieces that are going on behind the scenes to do that. And so we are trying to get better at that. We will likely be pushed to get much better on that soon too, with changes in how compensation will come down for realtors going forward. And so we do anticipate that happening. And so we're already making steps to work on that to make sure that especially our buyer customers understand if they sign a client rep agreement with us, this is what we're going to do for them, and how we're going to do that going forward, and what that expectation is.
Right.
Like I had a buyer that just texted me before we sat down and was like, okay, I need you to go see a house for me in 30 minutes. I'm like, okay, well, Actually, I needed a little more time than that. So, I was able to schedule it right after this. But, I do think that the buyers need to understand what they are paying for theirs. And, that's a lot of the time that's on us, that we haven't really ever said, hey, this is actually what we do for you, as crazy as that is. But realtors just traditionally have had a hard time on it. Kind of like my CPA. I don't totally know what all he does for me, but I haven't gone to jail yet. So hopefully he's doing good things. So anyway, so I think there'll be more of that as we go forward.
I think, it's hard sometimes as consumers, whatever it is that we're buying or purchasing, and understanding when you're paying a fee for something, whether it be a realtor commission or whether it be, to your CPA or whoever, you look at the fee, like for your CPA, right? He sits down at a computer, punches in a couple things, changes a few numbers, and you get a bill for $1,500, and you're like, wait a minute, how's that work?
Yeah,
but
I could have done that.
Right.
Oh, wait, actually, I couldn't.
You couldn't because you don't have the 20 years of experience that he had, or he or she had building up to that.
Yes.
So that's really what you're paying for most of the time, but it's just something you don't realize on a day-to-day basis when you see those bills. You're like, wait a minute, but you're paying for the expertise, right? I'm not paying the plumber $500 to come out for 10 minutes and change something on my toilet. It took 5 minutes. Yeah. I'm paying for the 10 years, that he's been doing this and his knowledge, so he can do it in 5 minutes. It'd take me 6.5 hours. That's what we're paying for.
Yep.
Okay, so last thing, I know, there's we've had, I feel like, a lot of doom and gloom to some extent on this, a little bit, but I'm a big believer, and I think you are too, in that you have to know what's coming in order to put yourself in a position to adapt to the changing environment, right? To stick your head in the sand like an ostrich and just ignore the changes in your market and just think it's all going to keep chugging along the same way, is naive, and I think a little foolish, if you want to continue to have success. So you have to be able to adapt and you have to be able to change. But let's end kind of on a positive note. So as buyers and sellers and agents that are looking, what, in your opinion, what is the true advantage right now? Why are we in a position now where it really is a good time to buy and sell, or it really is a good position to be in because of what's coming, right?
Yeah.
This is when you want to get aggressive, is now, right?
For sure. So that's the best news out there right now is the equity growth.
Yes.
I mean, it is just a phenomenal, life-changing, awesome situation. So yes, for as much doom and gloom as if you can get in the market, get in at any level, because that is going to put you on a growth pattern with that percentage of what your investment was initially. It's going to continue to grow for years to come. And so it is one of those where, to me, it's an easy bet right now, right? It's getting to live in an asset that is increasing every single day, and you've got to pay for housing anyway.
Right.
So I mean, there's a huge advantage to this, right?
Yes.
So, really, Spencer and I had looked at this, even last year, and we're like seeing what was coming and said, we really should have all of our eggs kind of in that basket. We should figure out how to maximize what we're living in right now safely, not going too crazy, but not at a place where we're just living in a minimum thing and then putting potentially assets in the market or something like that. We're trying to put all of our assets on that real estate side and watch it continue to grow over the next few years. And then, at some point have an exit strategy, but for right now, this is such a great time to really own that property and continue to ride it up.
Yeah, so the growth that's happening right now with equity, and again, inflation is not a good thing. It affects us across the board in a lot of different ways. Meat and groceries and gas and everything else that's impacting. I mean, there's outside forces outside of inflation that aren't just that, but it certainly is impacting stuff.
And this gives us at least something to battle
Correct.
And to stay
it's a hedge,
par.
Right?
Yes,
You're
right?
hedging.
Yeah. So, we have homeowners that, bought last year, $450, their house is worth, $525 this year. Those kind of numbers, that is a game changer.
Yes.
That's a life changer. What other asset could you have just lived in for a year and made $75,000? That's crazy. So, but it really is real, y'all. Really the numbers are there. Now, again, I can't necessarily give you a check for that, because if you move, I need you to pay for it in another property. But it is really changing lives out there, and so we're just happy to be a part of that.
Well, and I think the equity thing that, I always call this, financial calculus a little bit, in that there is, and this is, I would call it not risky, but certainly not something for everybody. Mm-hmm. But an asset like your home or investment real estate or anything like that can be leveraged a lot of different ways to grow your wealth in other areas.
Yes.
Because when you have an asset that's going to continue to appreciate, we've talked about all the reasons why, because everybody says, well, there's this massive crash coming. It's like, not in real estate. I don't see it. Anything can happen, right?
Right.
The world is what it is.
Right.
Anything can happen. But based on everything that we see right now, that's not coming anytime soon. So this growth that you get in that equity on your house, you can use it in a lot of different ways. You can take equity loans, you can leverage, debt against your property to go buy more property, to reinvest in the market when you're paying interest on a loan that's even at 4% right now, which is kind of where things are settling in. But you're getting a rate of return of 6 to 8 to 10% on an index fund.
Yeah.
Easy. The delta's easy on that, right?
Yeah.
You're making money. So, and again, I'm not saying this is for everybody, but it's just to highlight the fact that, yes, it's expensive right now to buy a house. Yes, you need a lot of cash. Yes, it's not easy out there, chugging away every day looking at 50 homes to try to get something under contract.
True.
But it is well worth the effort if you can get it, because the type of what we would call generational wealth that you can create, or the first step, right? This isn't going to take care of your kids, grandkids, but it certainly is the first step in moving in that direction by attaining these assets that you continue to leverage the rest of your life. And a lot of people don't realize that, when you look at what I would call the super wealthy, right? For the most part, they don't really sell assets very often,
right?
Especially if they appreciate. They keep them, they hold them, and they pass them on. Yep. And that's kind of how you start to grow this kind of stuff. But you have to think a little bit beyond the day-to-day bills of what I'm paying today. And it's not easy for everybody, because a lot of us are living paycheck to paycheck, and it's really, really tough out there. But if it means scrounging and saving and, maybe laying off Starbucks for a month or whatever the case may be,
I heard DoorDash needs a lot of drivers. So, I'm pushing everybody there. I'm like,
that's right.
Don't be a consumer at DoorDash. Be a producer at
That's
DoorDash.
Right.
It's
Bring
awesome.
It. Deliver it. But anyway, I really appreciate you sitting down and talking with me about this. This is one of those things where everybody's running into challenges right now, and it's really hard to know where things are going and what's going to happen. And any little insight we can always give is helpful for folks. And I encourage you guys, if y'all have questions. Amy's been in this business a very long time. Her brokerage is amazing. She has a ton of agents that work here. She's got a ton of help. That my wife works here, by the way. So in all disclosure, right? But she's very helpful. She has a lot of knowledge. Her staff has a lot of knowledge. And she's never one to not answer a phone. So if you have questions, please reach out to her. You'll have your little phone number scribbled down here below. Cool. And if you're an agent looking for a brokerage, this is a great landing spot as well. It's local, but she has branches in Houston, Austin, San Antonio, all over the state. So reach out, ask any questions, and she'll certainly be there to help. So thank you so much.
Awesome.
I appreciate it. All right, we'll see you guys next week. Thanks for tuning in.
Bye, guys.